Good afternoon, everyone. Scott Henderson. And of course, we're going to go over swing trade notes here Sunday, September 28th. And of course, please do review our disclosures at the end of this presentation. Let's jump right into it. Okay, let's start off with Mr. Market. Now, we've added a weekly, monthly, and a year-to-date market kind of recap. I'm going to leave that up for you guys to review. We've also added a section on the Fed. I think it's time to start tracking it pretty precisely, the day-to-day moves, because it's going to definitely dictate the market. We've indicated specific things, for example, tone. Bowman's rate stance is bullish. Powell's rate stance is bearish, right? Waller, Goolsbee, etc. It's also going to address money supply, both in the U.S. and internationally. Give you a little read on what I see there. Also, crypto markets, I'm going to let you guys run through that. We've also broken that down into a 7-day tape, a dominance mix, and then a heat map for the altcoins. We've also broken down the sector compass into a 5-day, a monthly, and then a year-to-date. I'll leave that for you guys to review. Now, we've added an ETF's kind of a macro pulse. Now, I think the most vulnerable this week is going to be the Dow, potentially back to 430 if we can't get above the 618 at 468.07. Kind of not an aggressive off sell. I would expect us to push and give us a better wick. Now, however, the Dow doesn't act like the NASDAQ or the S&P 500, so we have a lot of noise in this tape, and it pulls back without large wicks. So its MO is it doesn't have to have a wick, is the short. Now, on our charts, you'll note that I've added these buy zones. They're not necessarily demand zones. They're more of imbalance zones that align with unbalanced volume. So that's something we want to track. And then when we have these little gray bands that I've put in here, those are internal zones where we have some imbalance. So in other words, this shelf gets tagged right about 50% at 642. Most likely outcome is it bounces. Same thing with this shelf. 50% gets tagged, most likely outcome is it bounces. Same thing with this shelf. Most likely outcome is it bounces. So now what I see in the SPY here, and this is more of a macro view, looking at the daily. I see this as wave 1, wave 3, and wave 5. So we have this condensed 1, and we should get a condensed 5 here. So 700 is just a psychological number. I mean, it's right overhead. I can see us wicking right to that, and then boom, dump. It's kind of this look. So get up there, get a little shallow at 700, get a stop run to take out the top right there at 700 or 705 cents, whatever. And then we flushed that point. So I'm looking for the 100% fib roughly as the target. If we get a little more than that, great. But structurally, MACD is waning up here. We've got clear divergence on this leg to the upside. And, usually we do get a better back test, maybe a back test like this or a back test like this in the middle of the wave. And in this particular leg from this base, we have nothing. So something's going to come. I just can't tell you exactly when yet because I can't get a good read on a lot of the internal names. My generals it's a mixed bag. I mean, there's some strength and then there's some weakness and there's some in no man's land kind of thing. So NASDAQ has a very similar look. I'm looking at this as a shallow 1, an elongated 3. So we should get a shallow 5, maybe around 625 up in that range. However, that 600 is a big psychological number. So, we could still pull back. We've got just as many shelves in the NASDAQ where we could see a bounce. So if we get here, we probably get a bounce. If it is going to correct and get here, this will probably be an ABC. This will be our A. We'll get a B, and then C will be back down here around 540 area. That's sort of my take on that. All right, now we also added an ETF kind of rebalance thing. In other words, where should we be, what should we be holding long here? Well, XLK is a good choice. Targets maybe 367. So figure out how to get some kind of piece on there. Cash secured puts, common shares, your discretion. XLU, targets up around 95. Looks like it's about ready to break out. Something else we should hold. XLE, nice flat consolidation kind of coming out there. Actually measures up to about $1.30. So again, XLE is something we want to get a piece of. So looking at punch card stop. Now we're going to try and add this into the swing trade notes, and we're probably going to give it a new name. Not sure exactly what yet, but that's what we're going to do. All right, so Intuit, I think we got a shot back at this 820, the 78.6 fib. Nice pullback, nice clean, nice aggressive numbers. Came right to this imbalance zone down here, right around 600. So structure looks good. Getting a nice bid right here. MACD is not crossed, so to me it looks bullish. So we want to work on getting a position on there. BRKB, I think we can add it back. We've got a nice pullback. This shelf holds. Risk is this higher low, period. That's my take. I think it measures to about 629. All right, Ford Motor Company. I just don't like the name. However, the count. So, at this point, it measures back up to about 21 on the 618. We look at this like nice consolidation. We have clear divergence down here, right? Better buy zone was down here around 12 bucks. All right. So we could still pull back. I'd only risk about 12.50 here. But we got a huge amount of resistance. We have this band here, and then we have this band from here that, we had some definite imbalances in volume there. And we had some huge imbalances down here, which we came and back tested that, and it's held. So as long as we don't take this shelf out, I see no reason we shouldn't build back here. Rates are a tailwind for that. All right. Canadian National Resource, or Natural Resource, excuse me. So, this prior low, maybe 41 bucks is all I would give this. 61.8 back is very viable. An extension up to around 60 bucks. I think it's just got a huge moat. And I do think oil does recover when the markets do, but I can't tell you how long that's going to be. I mean, we could be in this crossroads of a recession for a while, but it definitely is a bullish looking tape here. Clearly, look at the volume numbers coming in here. Somebody's buying. Somebody bought it at the lows. They bought it again. They bought it at the highs, right? They bought it on this next dip. So they bought this higher low, big time. All right, just where this number is. So it's not really a squeeze. Somebody's just getting a position in them. And I don't know if that is because we're going to get more, or they're exporting, which also could be another factor too. I think they have that pipeline that just came online as well. So now let's, as far as last week's performance, I didn't add anything Thursday or Friday, so I did a late article because we had trouble logging in, so we didn't get that out till Wednesday. So that's what this info is from, but we didn't update it. Earnings this week: Progress Energy, Carnival Cruise Lines on Monday, Nike after the close, ConAgra before the open, Nova Gold. Not really anything that's on my. I'd trade Nike if retail wasn't so weak. If retail, we weren't having all these bankruptcies, I'd be trading Nike. But Nike is not in our report. So now we break down our equities roadmap. You guys obviously can review that in the article. Now to our swing trade setups. Now you're going to see me drift aggressively towards AI, autonomy, and other aspects of infrastructure that will benefit. Because right now, if we don't have the Mag 7, and I'm not sold that they're dead yet, like I'll use Amazon as the example. Them expanding their moat where their sellers can now list product for sale on other companies' websites like Walmart and use Amazon's distribution center at the same price they use it with Amazon, I think is going to be big for the sellers. And I think we're going to see more product go to secondary sites, which what does that create for Amazon? Transaction. Now that obviously is going to take a couple quarters to manifest as far as increased revenues, but I think that's really fairly bullish considering how aggressive Walmart has become. And if they can use that distribution network, I don't know that it's going to be less expensive than Walmart's plan, because basically you can, I think it's 13 bucks a month, and you can get free shipping on a majority of things. I don't know how that's going to apply as far as Amazon's concerned, but obviously at some point, I'll check into that to see what's there. But symbiotic is automation, industrial automation, sort of a tech kind of play here, because I think all the small companies are going to have to automate to stay competitive. There's no question. So I'm looking at this as mound one. So this is our trough. This is our peak. This is our trough. Nice space. Came up and back tested, got a reject. Now we've sort of put in this $50 shelf above this demand zone that we kind of have, this consolidation zone. So as long as we get back up and take out that 55, I see 71 bucks. However, we could zigzag around. This could become a diamond or a flag. We could build out, could come back and back test 50. So market weakness is going to be a factor. Okay, we haven't crossed bullish on MACD. We do have kind of a low in RSI, so I like it to the upside. However, you're going to see me call for a lot of buy rights. Buy rights are you buy common shares, sell covered. Reasons to me, you kind of have the best of both worlds. Often lately, the call premium is higher than cash secured put. So even though you have some risk of face value of the common shares, devaluing a little bit, if there's enough of a gain, and I like a number of 40% annualized or above before I'm going to do a buy. I like it higher than that if I have. I like this name. It's a way for me to get a position. Now, I'm not going to say you couldn't sell cash secured puts because you can. You could also buy some call right around 56 bucks, and I think you'd be fine. Just give it 60 days plus, maybe 90 days plus if you choose to do so. Now, Duolingo. We had right back to this buy zone, back tested here, right 50%, overshot it. So we got a stop run on it. 61.80 is 387, the 618 here. It measures this, the green label is measuring this peak here and this trough here. And this yellow fib extension is measuring this peak and this trough, right? I did not measure the position trade or the cycle on this particular chart for this week. There is a potential position trade later on, or building a position out for a position trade in Duolingo as well. However, I want to get back out of this, clear it, and I want to stay above that before I really start thinking about a position. This is also another own the common shares, sell the 340 to 360 calls to sort of finance the risk. So another buy right. I like it. I actually like calls a little more on this one, 340, 60 days out. That's something else you could do. All right, CELH, nice pullback, nice bounce right off this demand zone. Now, potential here, full disclosure, we do have a risk of going back to this middle of the zone, the middle of the gap. There's two things typically happen with gaps. Well, three things. Either we don't get into the gap and then we bounce, right? Or we get into the gap and we come down to about 50%, 60% of the gap, and then we fill the gap. And in that case, if we fill the gap, there's two outcomes. Either it bounces or it's going to overshoot it. We get a stop run and then it's going to. So there's a certain outcome that we have a good idea on what might occur when we have different things on the tape. So right now, my target is 69 bucks here from roughly 54 bucks where we are. So now I also like common shares here, and then selling $60 to $65. I also like the idea of trying some tight $55 calls, 60 days out. However, I'd like to see a better pullback in the indices to add calls anywhere. Let me say that again. I'd like to see a better pullback in the indices to buy call anywhere. Part of the reason is I think there's significant risk that we pull back because maybe the Fed takes an indecision move, or Powell and Bowman have a public debate about rates, because very often do we have a different view coming out of the Fed. As a matter of fact, I don't recall. We have a very political time in the Fed speaks. So, there's an outlier there. So I'm concerned about calls. So I would rather do buy rights or sell cash secured puts versus doing the calls. Because what I've learned recently is the premium is just decaying so aggressively when the flow stops to the upside. You're lucky if you have 10 or 20% left if you took those positions as calls. So I want to encourage being more conservative in this look. But ultimately, I do think that 61.8 back. And again, this is measuring this leg, and this 61, the green label is measuring this leg down here, the peak up here, the trough down here, versus this 61.8 is measuring the cycle. So I think this has a potential of being a position trade back up to about 75. Then it's going to pull back, and that should be another leg. So this will be impulse 1, motive wave 1, then we get a 2, then we get a 3, 4, and 5. So we do have some decent upside for CELH. Now, PAX Group, I just like the look on this chart. Now, I posted everything that I just did here in Swing Trade Notes in chat early this week. I want to try and start doing that. Try and give you a front run so maybe you can put some positions on Friday versus Monday, because I've been following it, and most of the positions that I flag going into the weekend, you're already up by the time Monday's open versus when I see them. So I'm trying to do the end of day data from Thursday and trying to set up the trades there a little bit earlier, because I think we'll get a better result or more gains for you guys. So that's the name of the game here. So full size above 1398, which is basically where we are. We're almost breaking out. We're kind of confirming on RSI. We could take out this high here. I mean, we could. Pretty euphoric that we had this back test, this overshoot, this to me, all right, especially with this divergent, confirm low, divergent low, divergent low. Then we tried to break out, rejected price, and then we overshot. So we had a clear stop run off of this low here. So it's got some FOMO back to the upside. Volume came in and it's kind of squeezy. The only thing I don't like is this looks a lot like this. That's the only thing. See this look here in the volume candles that we have here. So we need to stay above this. I'm not going to give this a lot of room. $12, then I'm out. That's it. All right, Dragonfly. Looks like we get a breakout here. This to me, I'm looking at Mound 1. So this is our motive wave 1. This is our corrective wave 2. We're going to get a 3, probably up to about $11. Get a 4, and then our 5, probably about 16.6. My first target right now is 780. I'm being conservative. I'm just being conservative. I don't know if you've gotten that. I'm being conservative. So nice back test of the demand zone right to the base of the gap using the weekly imbalance zone. So I just like the structure, the way this looks. Again, this is another buy right scenario. Sell the December 750 to $8 calls. You could do cash secured puts on this one where it's sitting right now, only because I think you can get $6. I don't remember if there are 50-cent positions in there, or $5. It won't pay as well as the calls. The calls were paying really well. I believe that one was like 90%. So now, of course, folks, I'm going to encourage you, if you have any questions, that is what chat is for. All right. It's the reason it's there. I monitor it. I might not be there every hour. Most of the time I answer within an hour, but sometimes when I'm there and I'm watching it, it's popped up on my screen. I'm immediate kind of thing, especially in the mornings after, or when I'm watching the opening range or towards the close of bell. Now we're going to try and reorganize a little bit. So if I'm going to take a position for the day, we're going to try and take them before 10:30. So we have a little bit of a break, and then maybe I'll add in the afternoon session, because a number of you requested that we give you a specific time. So basically, come to chat 9:30 to 10 o'clock every morning. I will post what trades I've taken by that time. Come to chat between 3:30 and 3:45, and I will post any positions I've taken or closed at the end of the day, right? And we'll try and do that each and every day throughout the week. Majority of the time, what you're going to see is I'm either going to put positions on Monday or I'm going to put positions on Wednesday, right? And then either I close positions on Wednesday, which can be at any time, to be very candid, or Friday, depending on what market conditions are and how we open Friday. I may close in the morning, or I may close at noon, or I may close in the afternoon. But that's roughly the schedule that we're going to keep. So, and if you folks like my work, please like and share it on YouTube. And of course, please go to Twitter at Swing Trade Notes. And, please do follow us. Great trading. Until next time.